What is happening, everyone? It's 10 o'clock on a Tuesday morning. We are continuing on with our quest of updating all the startup models with financial statements and general updates. So, this is the marketplace or network model where you can define a bunch of things about transactions on the network and fees, and that all translates into a certain amount of revenue, expenses, costs. This model is like a simulation where you can test out all those different factors and figure out your EBITDA, cash flow, timing of that over the course of 5 years. So yesterday we got through most of the updates that we're doing on this as far as getting all the tabs in. Today's going to be focused on actually getting the correct data into the financial statements that we're adding. Before I get into it, don't forget to subscribe, like the video, check out SmartHelping.com, where you can get all your financial models and templates for all kinds of different needs. If your business or organization uses Google Sheets or Excel, there is a lot of helpful logic here that can help you depending on what exactly you're using it for. We've got joint venture cash flow waterfalls, um, IRR hurdle based ones, equity multiple based ones. Some and these two are for real estate, but they have a lot of nice waterfalls in them. So, without further ado, let's go. The first part, so I'm pretty sure we fixed everything that was broken on the integration, and we are pretty much set. And we'll get, as we do the balance sheet and start trying to make sure it all matches, we'll see about anything else that might be off. So, revenue for this type of business is going to be based on, let's go to our monthly detail. We've got ad revenue, potentially, and fee revenue. So the ad revenue is if your network is making money through advertising, and fees are just your transaction fees that you're taking for providing the platform. So let's call this ad revenue fees, fee revenue. Okay, so ad revenue is this number. Fee revenue is this one. So ad revenue would basically be, in here we've defined it as, let's go to our assumptions. Uh, Non-advanced placements. So here's ad revenue. You could define the expected monthly visitors, growth in that each year, and then the average page views per user per month, the growth of that, and then the average revenue per 1,000 views. And you could change that if you think it's going to get better or worse over time. Uh, Fee revenue is a function of transactions that happen on a network. And you can see all that stuff going on here. And I went over that in more detail on yesterday's stream. Okay, cost of goods sold. Did we have a specific cost of goods sold item? Yes, we did. Okay, so let's go grab that. Cost of goods sold variable, fixed, total is this number here. Okay. Gross profit. It's fine. Now we're going to roll up the main category expenses as well as startup costs. Let's see, startup costs. So sales and marketing. We just have marketing on that one. General and administrative. R&D. Alrighty. Now our EBITDA should match. Let's hope. So we're getting 323, 527. This is 324. Difference of the startup cost amount because that's not included in this. It's included in cash flow though. So let's let me sum that up. So 325, 569, and what did we get? 323. Oh wait, we gotta subtract the startup costs. 323, 357, 835. Yep. Okay, so that matches. So we've captured everything that exists here for EBITDA. Interest is just pulling the debt schedule. That looks correct. Depreciation. So it looks like we get that coming in the future based on the start of this model, and that's fine as long as it's working right. So if I put this to, let's say, the first month of the template forecast, now you can see depreciation for that starting here. Taxes, let's see, 30, as long as the tax calculation is in 31 and 30, that's fine for now, which, yep. Okay, so we should be pretty good on our income statement. Annual is just rolling that up. Just make sure it matches 59, 59, row 59. That's good. Okay, so there's income statement is complete and looks pretty good on all the checks for now. This displays kind of what your operations are looking like for the business, revenues and expenses. Next up, balance sheet, which we really go for from the cash flow statement. And hold on a second. I better check my sound in case something's wrong. Yesterday I was 3 minutes in and I realized the sound was off. One second. Test. Okay, sound is coming through. Great. So cash, we're gonna get from the cash flow statement. One second. Okay. Cash flow monthly. So we got customer receipts here for operating activities. C9, which should be revenue. Okay, that's good. OpEx is 25 and 13. Yep, that works. Interest, yep. Taxes, see, 31.58. That's 31. Man, I'll tell you right now, this is hard work. And it's very mentally straining because I obviously want to spend more time creating new models and hitting new markets. But I mean, this is just a discipline thing. I literally am taking essentially 8 months out of time to try and do these. But I think it makes every single model better. So, I mean, and I only got one of me to do this, so But I'm telling you right now, this is not easy doing this. It's just a grind. All right, so this all looks fine. Let's go to CapEx. That's fine. Sale of business. Okay, so here we probably have some updates. Trailing 12-month revenue is going to be income statement 9. Okay, that's fine. And our multiple, so this is the exit value. This is percentage going to extraordinary income. The rest will go to fixed assets. And that's just going to be a tax calculation on the end month. Now remember, you can hit no here to not include terminal value, and all this will zero out. And you can see on the cash flow, there's no sale or anything happening here. Debt is not being repaid, but if we hit yes here, you see now you've got some exit money, you've got paying back debt. So all these references look good, and this is what I meant by the integration yesterday, where this is all linked together properly. Now this sale of company stock. So here's where we have a wrinkle. This model allows you to have a cap table where people can invest over time, which let's put some future investments in here. So this is going to affect cash flow, returns available for the owners versus third-party investors, all that stuff. So what we have to do here is now adjust what's happening first on the cash flow statement. So here, so sale company stock, this dollar value is going to be doing sum ifs, and actually, well, let's just reference the source data. So sum ifs, the amount of investment, and we have to include remaining equity as well. If the month here matches our month on the forecast. And then we just lock this. And then let's go back here. Let's say we have more startup costs here. Let's put like a $3 million reserve. Okay, good. So then we got money coming in for this. Here's your min equity required, 3.5. Let's lower this a little bit. Okay, and so this will fill in to make sure that the total equity needed is going to equal this here based on all these numbers. Equity remaining for this is essentially the owner's operator's amount will automatically be the first month of the template. Okay, so now go over the cash flow and look here. We have some coming in here. Wait, why is this all? We should have $1 million coming in out of March and April. What happened there? Oh, did not drag it over. Okay. Now this is going to be tricky with the distributions, because this is not our traditional cap table. So the good news is on this cap table, we do have some distributions here. I'm just thinking about how we're going to reconcile that or do a check on it. Well, I guess we can still have this okay, so basically the distributions tab is just more granular than we normally see, but it does still have the discounted cash flow analysis. It has annual returned per entity. So this detail's already here on what's been contributed, what's coming back to each person based on what they've contributed. And then the remainder is what's remaining for owner equity. So this is fine. I think this is just fine to keep like this. So the real trick is going to come on the balance sheet. All right, so this looks fine. The annual cash flow is just going to be summing up all that. Now the balance sheet is not correct, so owner's equity, yeah, basically it's off by that owner's or contribution amount because we got to update these. It's going to be outside investors, inside operators, owners. So we'll get to this in a second, but right now, so we can get a good cash flow requirement, first of all, let's delete rows 141 to 158. And then let's add, so we've got debt service, we've got investor funding, exit of the business. So now we're not going to do this calculation that's in here. We're just going to take the cash flow amount and we're going to go sale of business and then also sale of depreciable assets. And that is going to be this number. Drag those over. Looking good. Loan payback, we don't need this anymore because it's going to be up in the amortization right there. So taxes, we now actually have, and let's just throw this in as a negative, or come through as a positive since we're subtracting it. Oh, hold on. Get this yellow out of here. So I thought I saw taxes in the first year too on the cash flow statement. Let's look here. Oh no, not till year 2. Okay, good. So this should be pot. Okay, good. So that's positive, negative. So we got taxes in here. look at this is C16 now. Oh, uh, let's make sure these match. 3,506,000. Yep. But now this is not coming in all up front. So our zero sum is in year zero, and that's because we are positive cash flow every future month. But you can see if, let's say, we had a burn because we had some higher expenses in year one. Let's go back over here now. Still positive. These are just arbitrary numbers. I just want to see a negative burn for a little bit. Okay. Ah, there we go. So now $0 in month two. We're pulling row 194 to figure out the min cash needed, which now will be 3,527. Perfect. That's flowing over. Okay, good. Now the question is, do I have everything on the cash flow statement that needs to be? So we edit this. Taxes. Oh, CapEx. We got to add CapEx in here. Let's just put it right in with these. So CapEx is going to be, oh, is that already referencing it? D21 cash flow. No, so it's going to be 18. And let's make sure we're getting all this. So we want to add sales depreciable asset, reduce CapEx. Okay. Now you can see we're actually up to 5 million in required equity after this 1.5 CapEx came in. Now I believe we have everything. Let's do a quick check. So cash balance is here after equity is 436,557. Nope, we're off by a little bit. Oh, and so we're probably out by our owner's equity. So this is going to be let's see. This calc except for we only go down to 8 instead of 9. And bring this over 1. So that's outside investors. And then insiders will just be 9. Okay, and then we keep doing that plus previous amount. But we're going to say if this is greater than our exit end month, then 0. Put that on here as well. Now we can drag this all the way across. And hey, look at that. We have a 0 checksum. Assets equal liabilities plus owner's equity. And we actually have negative assets for a bit until we go positive. Cash flow. Okay, we might be missing something because cash, we should see a 0 cash balance. Oh wait, no. Not necessarily, because now we're sliding the equity over. So if the equity can come in on different months, it means we're not necessarily going to hit a 0 balance exactly. So now normally, so let's go to the cap table. So normally in the templates that I build, on all of them almost, I think there's one other one that I use this structure, but most of them will have all the equity that's going to be needed. Burn, initial startup costs, all that will be assumed that that comes in at the beginning of the forecast, like here. Now if we do that, we should see, wait, why is cash negative here? We should still see a 0 balance. What am I missing? Uh, so we're getting 3.5 from company stock. That's the equity. It should be higher though. It should be 3, oh wait, 3.57. Let me look at this real quick. So this is min of 194, which is correct. If you add in the equity, we should be at a 0 balance in February. So my question is, what? See, moving things around, the timing, all that is always the tricky thing with timing. I knew this model would be a little bit trickier because of that. So let's think about this. If year 0 we have this big startup cost, we have capex here, this is another big cost. $3 million. But if we add in the initial equity we're getting, we should be a positive cash flow for the first period. Let's make sure this is right. So operating expenses 3.987. Yeah, that's basically this startup cost and this. So this makes sense. And then the 1.5 also comes in. What am I missing here? The cash should never be, this cash should not be negative. Every once in a while you get one of these suckers. Got to think about it. So really we've got 5,375,000 going out. On here, that should be equal to, let's see what happened here. Oh, hold on. Investor funding is being counted in this. So in this one, it looks like we only want to add in, well, first of all, so this, I don't want to add in this cash flow from any of this investor funding, this 157. I need to know the number before that happens. There we go. Now, the actual cash balance, assuming min equity injected, would be whatever this balance is plus this. Okay, so wait, that's the same. Now, let's go back over to the balance sheet. Okay, there we go. This is what I was looking for. We needed to see a positive cash balance that goes to just 0, but not below, and then back up. So, great. And then we're at 435,057 on this. 435,057. So we match. So that means all this activity that's happening on our monthly detail, all the way down to the granular cash flow and all effects, are synced up with the 3-statement model because our cash matches, the balance sheet here matches. So we are good. That's probably the most difficult part of this whole thing. So now that that's done, we are pretty much set. So distributions to equity. What should this total? 435,057. Oh, we gotta update this calc as well. So here we don't want 157. And here you can just add in this. Okay. Now the question is, what do we reconcile out with this return? So if we sum this 429, what does this match up with? So this is taking monthly detail 193. Cash flow after tax, okay, that makes sense. So this 429 matches that. Okay, wait, we don't match here though, hold on. So cumulative tax after cash flow after tax should match, and it doesn't. So this minus this should be 0, so it's not. There's an error. And let's see, what could that be? So, oh, did I not add CapEx here? CapEx is in 183. Okay. Plus this. We're still out 13 million. Taxes. So cash flow after taxes should be 359. We're at 346, so we're definitely missing some stuff here. It looks like sale of depreciable assets, we didn't get in there. And then loan proceeds, which should just equal either this number, or if it's during the month, it would be a sum ifs. Okay, now that's balanced, so good. This is why we do our checks. Go back to this distribution amount. So this 435,057. Perfect. Actual cash balance. 435. And it's saying there was that much cash available. What do we do with 9 through 15? So we're zeroing that out. Just trying to see if this makes sense. 435,057. So is this just all the positive monthly cash flows, I'm assuming? Yeah, it's just all positive cash flow. Which makes sense. If you include the initial investment, you're at 429, which is this number. If you include the equity, you're at 435. So this 435 number is assuming you didn't initially invest that amount, but obviously you did, and that's why we have, a net present value here that takes out the initial investment, and the internal rate of return also does that here. Okay, so this looks good to me. Now watch what happens. Let's put one of these in the second year, and things get weird. So now let's go to distributions. So look at this. So for the third one, now there's actually only 4 periods because you didn't start till year 2. So you get 2, 3, 4, 5. So that, look at this, 2, 3, 4, 5. So that actually resets the calc for a correct discounted cash flow of that using the right period. There's only 4 for this one. So that's pretty cool. I thought that was pretty nice logic to do. Now, if you add all this up, you should be 429,683, which is our number there. Cash flow, yep, and that is our balance sheet number if you add in the equity. So, okay, this is great. So all this all reconciles good. I'm happy with that. Executive summary. We'll have to do some updates here for sure. Let's think about it. So, here we did listing fee revenue, transaction volume revenue, advanced placement revenue, and ad revenue. So let's add startup cost. Well, and we can keep startup costs. So this will give a little bit different view. So now startup costs are going to be actually down here. Investor funding looks correct. CapEx, we got to update. This is good. This is good. Startup costs, exit. So loan proceeds, loan payback, we can update to sale of depreciable assets. And that's going to be this number. Oh, it starts in year 1, not 0. That doesn't need there, that's fine. Proceeds, exit. Now on this annual, I actually can remove this as well. Now the question is, well, cash position. So let's update. So we've got EBITDA plus this minus this plus this. 431, 529. Is that our number? No. What are we missing? We need to be at 435 or 429. EBITDA here is 319. So that's good. What are we missing? Okay, this is it. So E, this should be D. Now 431, 529. Wait, what? 1.7 million. 1.7. That's this money. So it's got some reason it has this, but not these. Hold on, let me. Oh shoot, here, investor funding. So here, um, well, we could include that. So we could put in investor fund. So go to the annual though. Or actually go to cash flow statement annual. And it's this here. So now 435,057. Actually, we're gonna have to put this in the actual year. 435,057. It should be our ending cash balance after equity. Yes, it is. Okay. So this is all checked in. Subtract this from our annual to do the check. Alrighty. This looks fine. This is fine. Visuals look good. It's kind of cool. Annual versus IRR versus ROI. Cash flow distributed per entity. All right, this is pretty nice. We We got a break even in here too with fixed and variable costs. Break even revenue. Let's get everything up to the top left. So this model is now done except for the sanity checks. All right, so income statement 59. We didn't put it in, so it should be some of this. Oh wait, no, it's on the annual. Okay, H59. That's good. Balance sheet 60. Oh, hold on, we have an issue. Balance sheet. We're off by $1 million here. So that's definitely an investment amount. Which one are we missing? February 2020. Why is this not coming in? So it's coming in here. Balance sheet. It hits here. Oh, okay. So the annual. So this is, let's see, how are we going to do this? Okay, we'll just do sum ifs. No, we can't do a sum ifs. Index. We want just to pull the number on the last month of each year. So index, whatever this is on the end month of the year. So match. This, comma, 11 with the month, comma, 0. Lock C5 and 5 here. Now we drag this down and over, and there we go. Okay. So that's good, good, good. Annual detail, check against monthly. Annual detail. That's going to be I-194. Annual detail check against balance sheet. Okay, this is a little bit more tricky. Let's go. What did I say, 194? Minus total equity. And index balance sheet. Oh, what? Oh, yeah. This is a negative because And that's not possible to have a negative, so obviously this can't come in back here. Let's put it back up front. It's a good thing we did that though, because we caught a logical error on the balance sheet, so that was good. But if I were doing this forecast, I'd say, well, we can't have a negative cash balance, so we need money quicker. And there we go. What was I trying to? Oh, this number. So index balance sheet 11. So that is the cash balance that we want. Terminal value D for the year. Let's see, what does that just give us? So 435, we're just going to subtract that from this number. Oh, I was subtracting it from the 0. It needs to be from the cash position at the end. Okay, so that's balanced. So all these checks are kind of what I was already doing, but this is putting them all in one spot. Executive summary. I-42 is our check on that. Distributions. Now this is different, but what we can do is go sum distributions, and we know this total should always be equal to this. And then we don't need this one actually. All right, now we're good to go. What I will do is test this. So let's see if I change this to a partial year end. Dang it. That's what I was afraid of. So we got some sanity checks going on here. All right, so balance sheet annual, why are we out? 5 million, that looks like this. So because we have an exit earlier, this now picks up 0, but we needed to pick up this. So let me see what I did. I believe I should be able to follow the same logic. Let's pick up the last. Lending as a service should have the same thing. Let's look here. So if I were to end it in a partial year in the last year, balance sheet annual still pulls this because it's just going over. So it's never going to 0. Like no matter what happens, the equity stays there. Okay, don't save. So what we need to make sure is on the annual, now this is tricky because we can have money coming in over time. It's very unlikely that you have money coming in. You know what? Let's think about this. What's the easiest or most efficient thing to do? Well, I guess if it never goes to 0, we can just do this calc here. We can just go sum ifs. And then let's see, where's this at? Do I have, I guess I could go on the monthly. And I just want to pull, let's see, this is outside investors. Just pull this if the year matches my year on the balance sheet. Okay, what the heck? 157. Oh, I got this in year 0. Let's see. I could. Oh, here we go. So I could just sum up these based on this, and this is always going to be 1 hard-coded. All right. So let's go. Sum ifs, cap table, take these investment values if our year is equal to this year. Lock the L's and the D's, right? And then plus anything in the previous year. So this will always be, it'll never go down. And this can do the same thing, but just take 9. Our balance sheet's just a cumulative sheet. Okay, well, let's make sure that works when we have an investment that's in the future year. Let's say this one is. All right. Nope, something's wrong. So well, balance sheet's good. So balance sheet's working now. But our distributions are off by 180. So this is where things can get tricky, I believe. So 297.58, and we have a total of 296.167. Wait, let's do this one. 295.986. Okay, so this should match 2909. This, which it does. Now the question is, what have we done here? So cash flow out. This should all match. 294.136. So I think what's happening here, it's assuming nothing's distributed because all of this cash came out here. So there's our variance, and I knew this was tricky. So we're not going to solve for that. We're just going to assume if you're taking in investments, you're probably, well, I guess you could be cash flow. How much are we out by on this? This is why it's, so 188.27, and that's probably just the sum. Yeah, that's just this. So it's assuming this cash never gets distributed this month because we're actually taking on money. Now, the question is, do we want that to actually work like that or not? Let's see, if sum of R9 to R15. So I know what I was trying to do, which was say if it's a month where if it's a negative, well, do we really care if it's a investment month or not? Because you could have positive cash flows here even still. We just don't want to distribute anything if the month is negative. So I think we can actually simplify this formula and go if D6 is greater than 0, then just do what you do. Oh, I see. So this is tricky because this cash flow here includes this. Oh wait, no, I removed that out though. So 193 does not include any investment money, which might be our solution here. I'll tell you, this is why I have a more formalized way of doing this now, and this was an older template, and I was trying to make it work. The best thing though, so here it works better if you don't include any equity numbers until, I'm not including any of this until afterwards, and then this is the basis for cash distribution. So now I can make this formula really simple. So what gets split to each entity is simply if this is greater than 0, then do this number. Crap. Oh, my mouse is messed up. Then just take that number times the cap table. C14. And all the other stuff can just stay. Oops, so so D67 is just checking if they've invested yet. So that equals yes. And a D6 or a 0, D6 times cap table. Okay. And then here's my running share. So this is the share, but you can see why is this one 0? July 19. If distribution is J6 equals yes. Oh, what? Why is that just... Did I remove the formula somehow? I must have, because that wasn't like that before. Let's double check here. Curious. Okay, well that was so a good catch there. So for some reason that month was just zeroed out. It should not have been. All right, we're making a lot of improvements here. So I believe now what I can do is just drag this down. Wait, let's go back over to cap table. Okay, now that makes sense. Okay. locking here. So C6 is locked. That should go cap table C14. Otherwise 0. Okay. Okay, good. I'm getting the same numbers, so that's a good sign. Then when that other investment comes in, okay, good. So now we have numbers here, which is where we were having the issue. All right, this is great, and it's way more dynamic now. So that's fine, and then this one we could just do. Actually, we just drag this right down. Oh, nope. Cap table G20. Wait, see. So we don't need this first part. It's always distributed to the owner. If it's positive, perfect. Okay, now I'm telling you, my cap table structure right now is a lot cleaner than this, but this does work. I believe we're balanced out now. So if we sum up this, we're at 296, 167. Perfect. Thank freaking goodness. Okay, so that balances. Even with the month over here, let's see if this is back to the start. Should also be fine. Yep, same number. Okay, check, check, check. Okay, so we're good here. Let's go back to the very last month. That's good. We know mid-year of the last year is good. Let's try if we did it in the final or fourth year. Oh, shoot. Oh, shoot. All kinds of problems. So here, why are we out? Cash is out. What happened? Cash balance is negative. What in the world? So where's the error start at? Min cash position, it looks like. Cap table D11. Global control C16. Monthly detail. We're going in circles. Okay, I think it has something to do with, yeah, right here. So the taxes, I have capex. So technically, there'd be no possible way to have capex after the forecast is over, so that would not be a logical input anyway. So let's fix that. I don't know if that's necessarily going to fix the issue, but it's one part of it. So it looks like a tax thing. Let's go to the income statement here. So I have if error blank. What it should be is 0, if error is 0. Okay. Now this, oh man, we are hitting. I knew this freaking template was gonna take some work. I probably should have just scrapped the whole cap table that was already on here, just did the new one, but it's okay. I mean, it's nice that it can go dynamically through to future months, but we're out now. What is this? 5,718. Well, all right, let's look at 2019 cash flow. Okay, that matches. Let's look at 2020. That matches. Let's look at 2021. Matches. 2022. Does not match. Okay, is that what we're out? Let's go this minus this. Yep. And oh, that's sale depreciable assets. Okay, so why are we not having this in one of these? How did we not pull that? Did I not drag it? Oh, I didn't drag it over. All right, we are getting those errors, man. We are solving them. All right, so that's good. Now again, if you're raising money and you bring in money in the future, we did have it fixed, right? We are balanced in that case. All zeros. Partial last year, end year. Yeah, okay, so that's fine. That works fine. Put this back to 19. Um, we now have our cash flow good for a year. If we end on a partial year, let's double check the taxes. 60,608. Yeah, this looks good. Okay, good. We are almost there, and this is why you always do your sanity checks. This model is a little bit more complicated because of the dynamic funding logic. But we got it all reconciled, so it's all good to go. Let's do our final tests. So last year, zeros, mid-year, zeros, only 4 years, good, zeros, mid on the last year, zeros, nice. Now let's assume we don't use the terminal value, still zeros, zero, mid last year, zero, and then the final month. Perfect. Okay. Well, that was fun. It's completed. This model is only $45 if you want it. The link will be in the description box below to buy, and I will get the overview video done tomorrow, probably or Thursday. I just have to update the index tab to include all these new things. But there you have it. This is a very dynamic model. We got our cap table, dynamic cap table with adjusting investment months. And now we have a three statement model that matches that. And we are all good. So I will see you guys on the overview video. And next up, let's see. So I'm going in order of most popular sold. So here we did marketplace, we did linen as a service. Next will be open pit mine. So I'll do like a mining project. That's going to be a good one because this is like the second or third template I ever did. It's going to be kind of like the 5-year SaaS startup where there's a lot of cool updates that are, and this has been a popular template. So it's going to get a lot of upgrades that it definitely needed, a lot of formatting stuff. And you'll see like the difference between the models I have now and back then. So that'll be cool. I'm actually excited for that one. We'll start that one next week. And again, if you guys have any metaverse ideas, I would be willing to do a new template if there's a couple, one or two good metaverse businesses that you guys want to see. If you don't know what metaverse is, just look it up. And don't forget to subscribe, like the video. Thanks for watching. I'm just going to keep grinding until all of my startup models are fully upgraded with this three statement model and cap table.